Really sucking wind here on a cut to its outlook after missing estimates in its latest quarter. The stock is down 15%, and it wasn't necessarily, Brad, a bad quarter for Take-Two, just another disappointing outlook, notably on bookings here. And I'm looking at a good note by the team over at Jefferies. They are saying they are starting to get frustrated with the management team at Take-Two for these continued operational miscues. For me, from the outside looking in, you have to wonder, where is this next Grand Theft Auto game? It is just bizarre how this company continues to not give investors much information on when this title is hitting. This is their key sales and profit driver. Where is the next one? I think the current one has been in the ground for the past 10 years. Where's the new GTA? Please tell us, GTA. Please tell us Take-Two.
Well, if you want to know where a pre-recessionary mindset for the consumer starts to show up in the results of a gaming company, you can also look at some of the in-app purchases, which continue to be under pressure. They acknowledged this on the call last night, and they cited some current macroeconomic conditions. But that current macroeconomic condition is the fact that some of those consumer discretionary dollars, even if you are dealing with an in-game type of asset or in-game play that you have the opportunity to spend more on to enhance the experience, consumers and gamers might have to think a little bit more about how much they're spending into each of those experiences, and where does that potentially throw off some of the bookings in the future, which is exactly what this came back to. On the different titles as well, they did say that the largest contributors to their net revenue, NBA 2K22 and NBA 2K23 as well, and in addendum, Grand Theft Auto Online and GTA 5.
Yeah, and you also have to knock, I think, CEO Strauss-Zelnick here, paying close to $13 billion in May of this year to buy Zynga. You look at the conference call and all the things they talked about in Zynga on this call, it was a disappointing quarter. How do you pay $13 billion inside of a bear market for a tech company that has never lived up to its expectations?
Well, we're waiting for another key acquisition in the gaming space, which was one of the other blockbuster deals that was announced right in that same time period, and that was Microsoft and Activision Blizzard. And there was a little bit of cold water that was cast onto the propensity for that deal to continue moving forward. However, based on what Activision Blizzard spokespeople are telling us, it does seem like there is still confidence. In fact, they told us in a statement, we're very appreciative of our close working relationship with Microsoft and confident that the deal and its progress, confident in the deal and its progress, and know Microsoft is working diligently to get it done as well here. So a huge time period for some of the actual deal making to come through to full fruition. And it's a matter of where that exclusivity might be in the future too. And that's what some of the other game companies like a Sony have been trying to cast light on in order to block some of these deals from regulators approving them in full. Yeah,
and I'll just add too, and Dan Halley, our tech editor, I'm sure he would love this fun fact. The latest Call of Duty has had its strongest launch ever with $1 billion in sell-through in the first 10 days. That is incredibly, an incredibly good start for one of the key titles for Activision Blizzard and one of the key titles that Microsoft ultimately wants to get its hands on.